The latest batch of inflation data is out tomorrow, and that's going to play a big part in whether or not the Reserve Bank will lift rates yet again next Tuesday. So inflation's been trending down for much of this year, but last week's unemployment figures showed the labour market is still incredibly tight. It's just 3.5% nationally. In Australia's most populous state, New South Wales, it's 2.9%. Ahead of the new figures tomorrow, let's bring in Joe Masters, Chief Economist with Barrenjoey. OK, I do a crystal ball segment, Joe, every Sunday morning. I'm going to ask for your crystal ball now. What do you expect from the inflation numbers tomorrow?
Well, as you know, all year the crystal ball's been somewhat cloudy, but we are expecting the RBA to raise rates next week. Now, as you said, inflation's coming down. The question is it coming down far enough to bring inflation back into the band? And the uncertainty around that relates to that strength of the labour market that you just talked about and the flow through of that to wages.
So those pronouncements by Michelle Bullock that you probably need more unemployment to really kill the inflation problem, is that fair enough?
Well, that's what economics tells us. So we know that wages are the largest cost input to the services side of the economy. And while we know that goods inflation is coming down, services inflation is remaining quite sticky. So we do need to see some moderation in wage costs to businesses. Now, that either comes from slower wage growth or from higher productivity growth. If you want it to come from wage growth, then you do need to see more slack in the labour market. We've got a very, very tight labour market. As you said, record low unemployment in New South Wales and very close to record low in nationwide.
If we do get a rate rise, do we have any hope that it's the last?
We're certainly getting near the top of the cycle. Now, monetary policy, as you know, operates with those long and variable lags. So it'll take time to confirm whether we've done enough monetary policy tightening to achieve those inflation objectives. But what you do at the top of the cycle is you start to move a little bit more slowly. So we'll get, I think, a rate hike in August. And then Friday next week, we'll get the updated forecast from the RBA. And that will give us a bit more information about how they expect the economy to evolve. And that will allow us to assess whether we see more rate hikes. Now, at the moment, we're expecting a second further rate hike at some point this year. But look, if inflation comes in below expected tomorrow, if we see some weakening in the labour market, then we may not need that.
Now, we've seen New Zealand pushed into a recession after a number of rate rises. What's the difference between their economy and ours?
Well, there's a number of differences, but I guess the biggest one is part of that economic contraction in New Zealand related to the weather events that they had in the March quarter that stopped economic activity. So without that, their economy actually would have grown a little bit. Now, in both countries, we're seeing per capita consumption, which really drives economic activity, start to slow very, very rapidly. The question is whether population growth can be enough to offset that. We think that a recession is a 50 to 60% probability here in Australia, but we do expect it to be quite mild and relatively short-lived.
Joe Masters, Chief Economist, Barrenjoey, thanks so much for your time this afternoon.